Hi, I'm the presenter Zixin Wang. I'm here to present you about a paper titled Suggestions on Improving the Carbon Spot Market and Developing China's Carbon Future Market. Here's our content. In order to adapt to the global trend of responding to the climate change and take into account China's national situation, President Xi Jinping announced to the world about China's goal regarding carbon peak and carbon neutrality at the 75th session of the United Nations General Assembly on September 22, 2020, bringing historic development opportunities for climate investment and financing. Carbon emission trading has become a major global climate policy and is also an important milestone and the next stage of development in the field of climate investment and financing in China. Stable, clear, and effective price signals have always been the cornerstone of orderly development of the market mechanism. Therefore, carbon futures trading mechanism should be established to give full play to the role of the existing carbon market and rely on carbon price guardians to form an effective incentive and restraint mechanism, thus future encouraging private capital to enter the climate-friendly field has become a top priority for the development of climate investment and financing. Carbon futures can better detect carbon price. Carbon futures has the characteristics of continuity, openness, predictability, and liquidity, which can reflect of the market supply and demand of the commodities and the trend of the price changes. Carbon futures are beneficial for companies to make long-term emissions reduction investment. The establishment of the carbon future market is also beneficial for enterprises to achieve more diversified risk hedging purposes by building more complex future spot investment portfolios. It is conducive to long-term financial arrangements for enterprises to carry out emission reduction projects with large investment amounts and long payback period and promote the actual emission reduction. Carbon futures attract investors to increase liquidity. The establishment of the carbon futures market is also conducive to enhancing carbon activity, attracting more market traders to enter the carbon emission futures trading market and providing more sufficient liquidity for the spot market, allowing business operators, investors, and financial institutions to make the reasonable decision. At present, typical international carbon financial trading instruments mainly include carbon forward trading, carbon futures, carbon options, and the securitization of carbon financial products. Among these carbon financial instruments, carbon futures are the earliest and have the most active market, origin and serving from the spot trading. Among the global carbon markets, the EU and the US have established carbon future markets, and the carbon futures have become the mainstream carbon trading products. Here's the table shows the carbon futures in each exchange. EUA futures and CER futures were developed soon after the EU ETS was launched. On our left-hand side is the figure EUA spot and future transactions from 2005 to 2020. The US RGGI is another market that is actively developing carbon futures. The volume of the allowances and the future tradings in RGGI from 2011 to 2020 figures is shown on the right-hand side. With international experience, a good future market needs to be built on a mature and stable spot market and require three conditions. First, strong legal protection and severe punishment for violations are the basis for transactions. Second, sending the right signal to the enterprises by adopting clear and enforceable policies is crucial for carbon markets to function and mature. Third, the introduction of carbon future trading requires the participation of a wide range of investors, which can provide liquidity and provide a way for carbon emission control enterprises to transfer the risk of carbon price fluctuations. Although the establishment of the carbon future market has a strong role in promoting the development of China's carbon market and the construction of investment and financing, it still faces certain challenges to make carbon futures to give full play based on the current situation of China's carbon market and the corresponding policy mechanism. First, the carbon market needs legal support. The measures for the administration of carbon emission trading. For trail implementation regulates that where a key emitter fails to surrender emissions allowances in full and in timely manner, it only imposes a fine of not less than 20,000 yuan nor more than 30,000 yuan, which is less severe punishment compared to the cost of buying millions of allowances. The Ministry of Ecology and Environment's interim regulations on carbon emission trading management, a more advanced legislation has considered stricter penalties and will hopefully be introduced soon to underpin market confidence. Second, China's carbon market has not yet formulated a long-term allowance allocation scheme, and the allowances is lack of scarcity. Benchmark method which China uses is in line with the current national situation, but is hard for long-term allowance prediction. Finally, the national carbon market has not yet allowed investment institutions to enter, and the market is less active. During 2019 to 2020 carbon allowances trading compliance period, they are not allowed for individuals and institutions to enter into the market. Here are some suggestions on the development of the carbon futures. As mentioned above, it is recommended that relevant competent authorities carry out the following work to promote China's national future market in an orderly manner. First, improvement of spot market. For example, launch interim regulations on carbon emission trading management as soon as possible, scientifically set the cap and allowance program, and establish long-term emission reduction target in the carbon market. Established a market stabilization mechanism to stabilize market expectation, enhance information disclosure. Second, conducting studies and launching pilot future market for the market trading. It is recommended that relevant competent authorities conduct relevant policy research to clarify how carbon futures can be incorporated for management under the existing futures regulatory system. At the same time, a pilot should be established first. After accumulating experience and improving the mechanism, it will be gradually promoted to the whole national wild. Third, launch of futures market formally with relevant policies. After the construction of the 14th five-year plan, China's carbon market is expected to expand more key industries. The policy system has been improved. The allowances constraint has been strengthened, and the carbon market price discovery mechanism has been initially established. On this basis, combined with the previous studies in the futures and the future spot linkage pilot market, the carbon trading competent authorities and financial regulators will jointly promulgate the carbon futures regulatory system, and the exchange will announce specific standardized futures contracts products. Then future markets can be established by the fully preparation. The carbon futures trading mechanism has the advantages of discovering carbon prices, facilitating long-term emission reduction investment by companies, and increasing liquidity in the spot market. It is recommended to learn the experience from the carbon future markets of the EU and the US and promote the construction of China's pilot future markets in the future. And thanks.